Hi, everyone. Morning. My name is Benson. I'm partner of PwC, specializing in financial service sector. And I'm fully aware that our panel discussion is sitting right before the lunch. So I'm sure I will do it on time and make sure every one of you would have a good lunch afterwards. First of all, thanks for the MC, the kind introduction. And today, and also see if you can. And today, the topic we are going to bring to the panel is about the Wealth Management Connect and how the Wealth Management Connect bring the opportunities and growth to the fintech companies. And I'm sure every one of you sitting here in the Cyberport community will be very interested to hear different perspective from our panelists. Today, I'm very excited and we have a great panel with different discipline. We have a regulator here, we have the industry body here, we have someone really working on asset management, investing business. We have a consultant here. So let me introduce the panel here. First of all, starting from my right-hand side, Mrs. Sally Wong, the CEO of Hong Kong Investment Funds Association. So I think Sally spent a lot of time leading Hong Kong Investment Fund Association to foster the fund management industry development in Hong Kong. It's a great promoter to make sure Hong Kong stay very competitive in the fund management industry. Right next to Sally is Jason Morrissey, the Management Director of Financial Services in Accenture. So I understand, Jason, before you joined Accenture, you also have a very hands-on experience, rich experience. He actually built his own fintech business before he joined Accenture. And the business is headquartered in Hong Kong and expand to the Asia Pacific and have different presence in different market space. And actually, it has been listed on the Australian Stock Exchange eventually. So I'm sure Jason, with the role now in Accenture and also with the past experience building his own business, he will be able to share a lot of perspective. So right next to Jason, on his right-hand side, is Mr. Daniel Leung from Hong Kong MA. Of course, Hong Kong MA is a very, very important stakeholder and key regulator who has been working very hard and closely with other relevant regulators and the market players to make WMC, the Wealth Management Connect, really happen and become real. So I'm very excited, to have Daniel here to also share, hear from his perspective. Last but not least, we have Kelvin Lay, who is the CEO and co-founder of AQUMON. AQUMON is a company based in Asia and has built a very successful digital investment platform, making great use of the technology and the data to bring the new solutions and tools to meet the current evolving customer needs. And of course, the Wealth Management Connect is exactly tied in today's topic, how Wealth Management Connect can bring in opportunities for fintech companies. I'm sure Kelvin will be very interested to share his journey, how to start the company and how he look at the market at the moment. How about to start with, I would like to invite Daniel from MA to first of all, given that wealth management has been up and running for a short period of time, so far I think it's a great success. I think everyone is looking forward to it and expect much more, of course. How about Daniel? You share with us, from the regulator perspective, how you look at this WMC initiative in terms of the policy breakthrough, in terms of the effort that the regulators spend together to come to this stage. How about you share maybe a part of the journey or the thinking process and how you see the way going forward.
Thanks a lot, Ben. Well, as you mentioned, it is a very long journey until recently the fruitful delivery of the WMC schemes. And it also goes back to the Mainland's announcement of the 14th five-year plan earlier in March this year, which further underscored the mainland's commitments to further develop the Greater Bay Area in terms of, among other things, the interconnectedness between the financial markets between Hong Kong and the mainland. And the recent Wealth Management Connection scheme is the latest series of the Connect schemes. We had Stock Connect before, and then Bond Connect. And the whole journey, it's gradually from the institutional space, and then we are now venturing into the individual space. Under the WMC Wealth Management Connection Scheme, we see individuals in mainland China, in the Greater Bay Area, and the Hong Kong residents, we can invest in investment products and wealth management products in each other's territories. And through these interconnection schemes, we foster closer communications and closer fund flows between the two areas. And the major policy breakthrough that I've just mentioned is now individuals can flexibly choose their financial products, and they can operate their accounts remotely. And of course, there are some policies arrangements behind, but it's a major breakthrough from the institutional space to the individual space. I think in terms of the opportunities, everyone would appreciate that the Greater Bay Area is the most affluent areas in mainland China, and we have a GDP of $23,000, which is even bigger than half of the economies in the G20's economies. And there are a lot of affluent families, and these mainland Chinese, they do have the need to diversify their investment portfolios. And the wealth management connection schemes definitely provide a very good channel for them to allocate their investments. On the other side, it provides a very good opportunities for mainland investors, for Hong Kong investors, to tap into the growth of the GBA areas. And I think everyone will appreciate that the GBA area is the locomotive of the future, the main driver of the future economic growth. And investors in Hong Kong would very much like to make use of this opportunity to further advance their investments. So I think there are a lot of coverage in terms of the account openings arrangements, the closed loop fund flows arrangements, the quotas, and the eligibilities of the investors. Basically, these are all basic informations which are all available on the HKMA's website. So I'm not going to spend a lot of time on that. But I think alongside the rollout of the wealth management connection schemes, while it is in the very beginning, and we adopt a gradual incremental approach, and with risk under management, good management control. So everything starts from a prudent, step-by-step manner. And although the scope of the scheme is confined in the very beginning, but I'm sure that it's paved way for further developments, and it's definitely provide a lot of opportunities for banks, fintech companies, as well as investors. So we are very excited about this major rollout, and we are going to continue to work closely with the relevant agencies, regulators, the industries, to look for any opportunities for further expansions. So this is basically the policy behind and the rationales.
Thanks a lot, Daniel. I think, as you said, I think this is a good start, and there's a paved way to the next step. So maybe I invite Kevin from the as a co-founder of a fintech company, and very successful in the investment space, how to help the clients to use the technology to do the investing. So could you please share with us, how you look at the WMC, and what is the importance of the digital tools, technology in this initiative, and how the customer could benefit, from this great initiative?
Yeah, I think it's a very wonderful scheme from HKMA. And actually, I came to Hong Kong back in 2008. It's the first time to have this two-way flow of this capital, especially in the retail side. Before it's only like a one way. Sometimes it encouraged to go outflow and sometimes encouraged inflow. And this is the first time we have this kind of wonderful arrangement. And for the fintech company like AQUMON, we strived to provide the best algorithm-driven asset allocation robo-advisor system to the institutions. For example, we cooperated with CMB Vinlong Bank back in 2019 before Wealth Management Connect. And we go through with HKMA's sandbox as well. And it's a very meaningful journey for a fintech company to go through these regulations, considerations, and also about the compliance of the user journey. So we launched this product early this year, and the performance is pretty good. Because everything is diversified, we help the clients to invest in 12 to 15 mutual funds authorized by SFC. And it's like diversified into different sectors, different regions. For the first time user who is like investor offshore, like a mainland user who is using Wealth Management Connect, I think it's a pretty safe way to invest as they don't know about the like specific features of a single asset or single region. So I do see some of the numbers is pretty amazing. The average investment amount, although we start only like a $4,000, but the average investment amount is $60,000. So it's like more than 10 times of the initial investment amount just in half year. And the performance is really stable. It's up like 2 to 3% only for half year. So I think in the future, more and more institutions, especially the banks and also the other securities house, they will get into this Wealth Management Connect scheme and have more product offered to their clients. But overall, I think it's really good for the retail investors, for their end clients, to have this stable long-term investment in the future.
Thanks a lot, Daniel. Maybe I move on to Sally. Since you are leading, the Hong Kong Investment Fund Association, and I think you have a big agenda how to educate the community, how to foster a better environment for the industry development. So now we have the smooth launch of WMC, and I think as Daniel highlight is a start. I think everyone is looking forward, how that would further grow and develop and evolve. So from your perspective, how you look at the industry to be developed, now and going forward because of the WMC, in terms of how to, suit the customer's expectation, how the investor behavior may be changed and reshaped, and also because of the more use of the technology, and also because we are talking about the cross-border, investing behavior. How you look at this and how you foresee the market would evolve going forward?
First of all, thank you very much for having me to join this panel. And first of all, also thank a lot for the Hong Kong MA and the SFC for coming up with this framework, because they have spent so much time to come up with the structure, which is a major breakthrough. Because as Daniel has mentioned, that in the past, the Stock Connect and the Bond Connect are primarily the institutional investors. Now we are now venturing into the retail investors. This is really a major breakthrough. Even though currently there are different channels that mainland investors can access overseas, for example, QD and others, but there are a lot of restrictions and a lot of frictions. But the Wealth Management Connect provide a very easy and convenient, effective platform for mainland investors, the GBA investors, to invest overseas. But of course, this is the first step, because we start off with a very prudent manner, and there are quite a number of levers that the regulators still impose to make sure that we start in a very prudent manner. And one aspect that relates to the earlier panel members talk about the advice part. Currently, under the current framework, that the mainland investors, the GBA investors, can only enjoy execution only. They can't really have the advice element. And this is something that we hope that in 2.0, the regulators will relax a bit the requirements so to allow GBA investors to avail of the advisory services, because we think that is very important. And based on the investor survey that we have conducted, the advice element is very important for the GBA investors, especially for many of them who have never ventured overseas. So this advice to hand-holding, not just upfront, but ongoing, is very important. And we hope the regulators can relax on this part. And of course, there are other areas in 2.0 that we hope to see relaxation. For example, product range in terms of quota and other aspects. But these are areas that we hope to work more closely with the regulators to ensure that the GBA investors can enjoy the same level of service and the suite of products as enjoyed by Hong Kong investors currently.
Get it. Thanks a lot, Shirley, for your sharing. And Jason, now we're sitting in Cyberport. We have, the great Cyberport, community. A lot of them would be, having the startup, having a lot of, innovative ideas. And, as I highlight your history, you have that, on-the-ground experience to build a business. And also you're now working for Accenture. So how about you share with us, how you look at, while we are sitting in Hong Kong, how you look at Hong Kong as a hub or as a location that would, as a springboard to facilitate the fintech companies to grow into China, and also with now WMC in place, what would be the great opportunity for all this audience and startup companies in Hong Kong?
Certainly, Benson, and thank you for the opportunity. Hong Kong, I think, is a really, really good place to set up a fintech. And historically, Hong Kong has been a hub for Chinese companies to expand globally, or multinational companies to look to move into China. I think over time, Cyberport and the regulators and the government have started to look at Hong Kong as more of a regional hub, particularly off the back of, Chinese companies and MNCs wanting to be in this part of the world. When I look at specifically Wealth Connect, though, you would think that, given the advancement of technology in China, I think a lot of my esteemed colleagues in the US and UK and Australia are quite surprised when I talk about how digital mainland China is, how digitally savvy the investors are, and in particular, the GBA is even more digitally savvy than the rest of China. And so, sometimes I have to pull out data to prove this is actually the fact. So a lot of people think, that's solved, Tencent, Alibaba, Ping An, you've got all the tech companies that have this solved. But what happens is that, that's solved for domestic mainland China. So what happens is when you have something like Wealth Connect, it starts to bring out a whole range of, opportunities is what I'd call it, on how do you connect up, a primarily domestic financial system with processes, systems, everything built for scale in one country, and then hook that into global operating models, global funds domiciled in Hong Kong, and then vice versa. Our multinational clients come to us saying, okay, we want to leverage this, but how do we build cross-border processes, cross-border technology? So when I look at fintech and opportunities, there are a whole range of things, or I don't like to use the word problem, opportunities to be solved with Wealth Connect that I think could really be an opportunity for people here. A lot of companies are looking at whether it's data or Daniel's talking about Bond Connect, Wealth Connect. The Hong Kong Exchange is moving some technologies to DLT. What does that mean for Wealth Connect in the future? So it's not necessarily solving the problem today. It's like, well, where will the policies head? Where will advice head in the next 3, 5, 10 years? And how can you help solve for that now and get corporations ready to solve for that? And back to Sally's point on investors, what is the end customer experience? Right? I know it sounds cliched and you always hear consultants talking about customer experience. But if you are an investor in Guangzhou or Shenzhen and you're looking to buy an international product for the first time, what is the education around that? What is it over time, hopefully the advice and the services you can to understand what you're buying? I actually came to Hong Kong in 2007. And I remember, I'm sure you guys remember, the flood on QDII products, and people in Beijing, Shanghai going out buying products that all then crashed at in 2008. And that sort of sticks in mind. I think the current prudence is correct, so that you don't have that customer experience. So we have time, as a fintech community, we have time over the next few years to start preparing for where the policy and regulations and advice will head. So I think it's a real opportunity, because when I speak to our customers, there's 19 providers now. They all have gaps, whether it's process or technology. And a lot of that goes back to digital customers, particularly say on the Guangdong side, that want to interact digitally, but then there are constraints or challenges on how to do that. So how can these problems be solved? How can these be opportunities turned into solutions for our end customers? So they're the couple of things that I'm seeing, Benson.
Thanks, Jason. It's very insightful. And maybe going back to Daniel, I think Hong Kong MA, of course, is a very important stakeholder and also a key promoter on the fintech adoption, and a key driver on the fintech strategy 2025 by MA. So Daniel, how you look at the current WMC setup, and how the fintech strategy that is embraced or promoted by the Hong Kong MA could be sort of the element that the players could be considered, and when it comes to potentially next phase of the WMC, what would be the implication? What is the insight that you would like to share with us?
I think the HKMA's 2025 fintech strategies, one of the major objectives is to foster developments of a healthy and comprehensive ecosystem, fintech ecosystem, from end to end. And the vision is to facilitate the financial sectors to adopt fintech comprehensively by the year of 2025. So that ecosystem of fully digitizing would definitely provide a very solid foundations for financial institutions to capture the GBA opportunities. As Stanley mentions in the very beginning stage of WMC schemes, the investments mode, the selling mode is only an execution mode, i.e. the investors can only identify their own desired investment products, and then the financial institutions are not allowed to recommend or do the advisory surveys. So in short, the investors can only go and buy their desired products through the internet or apps. So although in the beginning that's the policy setting, definitely the fintech and the space can provide a lot of value-added services, like enhancing the customer communications experience, and how the investor can place their investment products. That's the whole investment journey would be more desirable. And also in relations to the remittance journeys, i.e. for the funds to be remitted from Hong Kong to mainland and vice versa, how fintech can foster a more smooth process, a seamless process. So these all open up a lot of cross-border opportunities for fintech companies as well as financial institutions under the backdrop of the Hong Kong MA Fintech Strategy 2025. So I would say that the prospect is bright, although we are taking a step-by-step approach. So as time goes by, as Sally mentioned, the industry is engaging in active dialogues with the regulators in both sides. So as time goes by, we hope that we will see more to come.
Thanks, Daniel. And talking about the technology, maybe Sally, so I think other than the WMC, there's wider, initiative talking about, the digital currency, the central bank digital currency, the ENCNY, ENH, Hong Kong dollars. From the market perspective or from the industry perspective, how the industry now looking into this, how they would, sort of plan, their strategy going forward. When we talk about the expansion of the WMC, the future potential use of this kind of digital currency, how that could be linked together and further explore the growth of this the wealth management industry.
If we think ahead, currently, even though when we talk about ECNY, it's basically still very focusing on the retail side. But if you think ahead, further down the road about the whole development of renminbi internationalization, the use of renminbi, the use of ECNY in general, I think at the wholesale level, there's definitely a room there. And there are certain areas that we can link it back to the Wealth Management Connect, because there are certain features under the ECNY. For example, the two-tier structure, the operational model, the managed anonymity. That is, for example, the smaller amount, you can still maintain anonymous. But for larger amount, then you have to have the real name basis, and that you have to comply with AML, KYC, all these requirements. So there are certain features that we can probably tie the ECNY future development with Wealth Management Connect. And with that, some of the current levers and controls under the Wealth Management Connect, we may not necessarily have to maintain them. For example, the quotas, the closed loop. If the regulators can have more mechanisms to monitor the flow, the status of the movement, capital movement, the identity of the investors. In fact, some of these current restrictions that we have under Wealth Management Connect in other schemes can probably be removed or at least, like say, relaxed. So I think these are areas that we need to think ahead as to how Wealth Management Connect maybe is under 3.0, 4.0, or 5.0. How we can really enhance the whole capital movement, the money movement, and more importantly, how to tie in with the grand scheme of things, the overall development of the renminbi as a currency, not just for small transactions, but for major capital accounts movement. So I think there's a lot that we can leverage on. And this is a very important platform that we should work with all the different stakeholders to see how to leverage on this.
Thanks, Sally. Thanks a lot. And how about Kelvin? Maybe going back to you, as a co-founder of a startup company, I'm sure you come across a lot of challenges, hard time, to come to this stage of the business. So in terms of the WMC, of course, that opened the door and create a lot of I would say imagination and also the market space for the asset management industry. So as a startup co-founder, what is your advice to someone sitting here? What would be the something that they should look out for, or some of the sort of tips that you would like to give to them as a successful business co-founder in this space?
Yeah, actually, when I get started with this AQUMON, we started from the library of HKUST. It's in Clearwater Bay. So I used to work in investment bank in Central, but I stayed in the Clearwater Bay in a village house for 3 years to do the development of our algorithm. Our mission is very simple. We want to empower every investor to use our technologies. So in the past, like 10 years, it's like a Futu, Robinhood, Coinbase, this kind of electronic trading platform that is helping more young investors get into the capital market. But I think in the next 10 years, it's the digital wealth management that will help a lot of the middle class and those investors who don't have the private banking services, but they also want to have diversified investment in the future. So I think there are a lot of opportunities in Hong Kong. The first one is Wealth Management Connect. Of course, it have a lot of new opportunities getting into Hong Kong. I see the number that just in 2 years, Hong Kong will surpass Switzerland as the world's largest cross-border wealth management center in the world. And the second one is eMPF, right? Because in the past, we have very manual MPF scheme, and in the future, next year, there will be new eMPF. And AQUMON want to be the pioneer of this industry who can provide algo-driven, very low-cost, transparent, long-term, stable investment tool for Hong Kong citizens. And it's a tremendous market. In Hong Kong, there's like 35 trillion Hong Kong dollar AUM in investment industry. And in MPF, they are like a 2 trillion Hong Kong dollar. And, but actually, the penetration rate of robo-advisor is pretty low. It's only like less than 1%. Our goal is to empower like 1 trillion Hong Kong dollar AUM in the future in just 2 years or 3 years. But it only takes like 2.8% of the whole AUM of the industry. So it's a long way to go, and we welcome a lot of institutions that can cooperate with us, and also welcome other robo-advisors come to Hong Kong.
Thanks a lot. Thanks, Kevin. I understand we are running sort of out of time, but maybe I just would leave the last question to Jason. So I understand, Jason, you know, you have a lot of clients. So maybe just to quick wrap up, you know, from your interaction with the community, so what is the sort of the hope, as I said, maybe the imagination, or, you know, I think, Sally, you lean to 2.0, 3.0. So what is the sort of the market, you know, hope on how this, you know, WMC could further evolve and could further expand?
So, Vincent, I'm very conscious I'm between people and lunch, so I'll keep it to 20 seconds. I think the hope is that it will evolve, exactly as Sally said, into a full-blown, you know, wealth management advice and the opportunity to buy products, whether they be pensions or funds or shares, or get advice on property over time. But what our clients are saying is that they are prepared to be patient, and they want to, you know, make sure it's done right, make sure it's done over time. So that's a little bit different to, say, when I first came here 15 years ago. So they're patient, they appreciate it will take years, they think the policy directions are going in the right direction, but of course they're keen for that to happen as soon as possible from their businesses, but they're being very, very patient and waiting for the right time to do that. But as I said, preparing, getting ready so that they can be competitive and first to market when these 2.0, 3.0, 4.0 come. But yeah, their aspiration is for it to be a fully fledged wealth offering with you know, global products.
Thanks, Jason. I think this time up, you know, we are running out of time. But to wrap up, first of all, thanks, you know, Cyberport for having, you know, all of us here. You know, great panel, and I think great panel discussion. And all thanks, you know, the panelists here for sharing a very unique perspective. May I ask you to give a big round of applause to the panelists for their kind sharing. Thanks a lot. Thanks for coming. Thanks for time.